Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors, and welcome to this Monday edition of Benzinga's PreMarket Prep, brought to you by Thinkorswim. I'm Spencer Israel. No Joel today. He is in sunny and warm Florida, while Dennis and I freeze our butts off here in Michigan and Canada. Dennis is with me today, so Dennis and I are going to talk about what's going on in the markets. We got two guests on the show this morning. First, we got Gary Kaltbaum at 8:15. I love having Gary on. He is an investment advisor, author of GaryK.com. You've probably seen him also on Fox Business. And at 8:35, Tim Melvin will join us. He's a MarketFi maven and the author of the Tim Melvin Deep Value Letter on MarketFi. A lot of good ratings today. We got rating changes at Costco, Finish Line, Lowe's, Merck, Bristol Myers. Had some M&A chatter over the weekend, and we'll talk about the options triple witch or quad witch actually on Friday. Dennis was watching that closely. Dennis, how you doing?
Doing pretty good, Spencer. How's the weekend?
Well, it wasn't as good as it could have been because I didn't see Star Wars, and I know you did.
I saw it.
Yeah, you did, and what were you, I didn't see it, so don't spoil it, but what did you think?
I won't spoil it, but I kind of had low expectations because I did not like, and I'm a pretty big Star Wars fan. I did not like The Force Awakens. I thought it was too much a takeoff of the original Star Wars.
Yes. This
is good. This is completely different. New actors introduced, a lot of new ones, and they were excellent. I mean, there was a lot. The storyline, despite just being based obviously on the plans of the Death Star, you think, oh, how can you make a whole movie on that? Man, it was good. It was detailed. The special effects I thought were excellent. I don't know. I was actually very impressed. So maybe I just had lower expectations going in, but I thought it was one of the best Star Wars movies ever. It was really good.
One of the best ever. Wow. Okay, here's some numbers.
I think so. It was good, man. So, well, how are the numbers?
Yeah, here's some numbers for you. $155 million domestic. That did beat the estimate. Disney was projecting 120 to 150, so they beat the estimate there in terms of the domestic box office. Globally, it brought in $290 million, making it the number one movie around the world. For some context, this is $100 million less than last year's Star Wars, but that's to be expected. Last year's was the record breaker, so not expected to do that well, but still be the estimate and very well. And it's the biggest movie in the world.
So the estimates were for how much, Spencer?
120 to 150 million dollars. It came in at 155.
Domestically. So beating those estimates too, and that's why you see Disney shares. Disney's getting a pop on this, and the reviews before I thought weren't that. I read one review, I think it was from the New York Times, and the review wasn't that great. That was like on Wednesday or Thursday, and I was like, oh, I'm kind of disappointed that the review wasn't good. But then I was starting to read some reviews over the weekend, and the reviews were coming in better here. So I think if you were a hard Star Wars fan, you're gonna love it. I think if you don't watch Star Wars or haven't watched some of the other movies, you might get a little bit lost because obviously there's some details there that you might not be aware of if you didn't watch the other movies. But
True. That
being said, if you're a Star Wars fan, I think you're going to love it. And Disney trading up over 1% here now in the pre-market. So this had a big run already, like you were pointing out last week, Spencer, from 98 to 104. Consolidation here for a few days. You think, okay, well, now the movie's officially out. Maybe it's going to be a sell-on news thing. But I don't know if that's going to be the case because, you know what? The movie was good.
Yeah, the movie's been made, I feel like. I mean, it's been run up for now 4 or 5 weeks at this point. But yeah, if that's really the reason why it's trading up this morning, then,
I think so.
Great.
I think that's why it's trading up.
Great.
I think it's trading up a buck. I think some people were, a little bit concerned that maybe it's not going to get as good of reviews or maybe it's not going to bring in the numbers that it needs to bring in. And the weekend was good for it. So I think that's why Disney is trading up here in the pre-market at 105 here. Technically speaking, I'll just do a little technical thoughts. 105.64 was a high 2 days ago. And if you go back just to a week ago, 105.52. So a little bit of technical resistance up there in the 105.5 area. The stock, like we said, has run up a little bit already ahead of the movie. So I don't know how much gas it's got in it, but I don't think the movie was bad for the stock.
Yeah, I think people are saying, I was reading online, Disney's purchase of Star Wars was like the best thing that could have happened to Star Wars and to Disney. Is some things I was reading.
Well, new characters introduced, so you think, okay, well, maybe there's going to be some more toys, and obviously, well, if you want to look at other plays like that, I guess Hasbro is the one. Is it Hasbro that has the toys for Star Wars? I think
gosh,
so.
I don't even know.
Yeah, Mattel or Hasbro. I don't know who makes the toys, but anyways, Disney's still making money off of those too. When you bring new characters, there's new
Yep.
things.
Yep.
So that there's a lot of potential. Apparently, at Disney World, they're building a whole like Star Wars land or something, aren't they?
Yes.
That's what my
Yes.
buddy was telling me.
Yes.
I don't know if it's at MGM or where it's at, but there's a lot of places they can continue to go with this. And as they introduce new characters and new movies, it was a very interesting.
Okay, that's enough Star Wars talk for one day.
Yeah, I don't want to spoil anything, so
Joel
we'll move
wasn't
on.
here, yeah, I didn't see it, so I can't. I can only comment, so much. I wish I had, but
Let me know what the
um,
chat thinks if anybody
yeah.
saw it this weekend,
Well,
because Phil saying he liked it.
yeah,
So
Phil said the theater was packed. All right, let's move on. I want to discuss with you GNMX. We were talking about this on the pre-market show. What
yes.
what
So
exactly happened on Friday?
let's talk quad witch. And
Oh,
there was a few fireworks. It was pretty quiet. Quadruple witch. I still call it triple witch because I don't know who trades the stock futures themselves. But there was some fireworks in some individual stocks, and this one had the biggest fireworks of them all. GNMX on the closing print gapped up from $6, and I think it was trading around $6. It ran up a little bit to 6.85, and then it gapped up to 17.75 in the closing print. You're gonna look at it and say, "What is Dennis talking about?" I don't see that print on the chart. You said it to me this morning, Spencer.
yeah.
But that is because afterwards they canceled the trade. So how did they do that? Well, obviously it was very ridiculous closing print. So I think it was about 180,000 shares wanted to buy it on the close. Nasdaq is an automated close where pools in the buyers and sellers. Wasn't enough sellers, so it went all the way up to 1775 to find the sellers. Now, if you had a human being doing that print, and if it was on the NYSE, there would be some human involvement still, and they would do it at a more rational price because it's completely automated, that system. Peter just puts it together. It's like, okay, well, this is where we're finding liquidity to put that together, so we put it at 1775. Literally, if you were that institution and there was 180,000 shares, maybe it was one or two major institutions that were buying it, you'd be calling up your Nasdaq and saying, "What the hell?" I mean, the stock is $6 now. I'm filled at 1775 on my closing order. Are you kidding me? So Nasdaq looks at it, reviews, and obviously says, yeah, that is just not obviously fair. So they canceled the trade entirely. So some people imagine you were along it and boom, you sold the closing print. You'd be like, yeah, baby, boom. 1775, but an hour later they came out and canceled the trade, so those trades are just off the books, and the stock they had the official close at $6.85. So pretty crazy close for GNMX. That was the craziest one. Peter in the chat is talking about Nvidia too, and Nvidia did get pumped in the last few minutes as well. This kind of felt like a little bit of capitulation for Nvidia. The stock has been absolutely incredible. Talk about beginning of 2016, stock started the year around $26, up over $100 at the close. And in the last 3 minutes, just bring up the chart, Spencer, on NVDA from the last 3 or 4 minutes. You'll see the spike. Stock was around $98 with 10 minutes to go. NASDAQ posts the closing imbalances at 350. So once that information becomes public, they start running it up. And it ran because it was a big buy imbalance. They run up 98, 99, 100, close at $100.41. So basically on the closing print, gapping up 60 or 70 cents more. Immediately trading back down after hours. It's immediately down here this morning, trading down 75 cents. So come and say, oh, market's up, Nvidia's down, what's going on? Well, because Nvidia, that run up at the end of the day was kind of ridiculous, and traders are taking that opportunity to sell stock here even after hours they were, and in the pre-market. Stock is trading down 70 cents. So that was a pretty ridiculous run, Nvidia. I got two more for you as well. Ross Stores ROST. This one was huge. Look at ROST. It was around 67.5. With 10 minutes to go, close to 69.5. So ran up to over $2. That's a huge move for the retailer Ross Stores, 2 points in the last 10 minutes. It is down already $1 here. After hours is trading down, and the pre-market is trading down about $1 at 68.40. Only 200 shares are traded. Best offer 68.99. So it's going to give back some of those gains as well, because this is just all order flow. You say, how does this happen? Well, sometimes you have some big institutional orders at the close in one direction, and if the offsetting liquidity, there's people not there, or machines not there to take the offsetting order, it will gap up on the close, and sometimes significantly. And 2 points up on Ross Stores is a little bit too much. The last one I had in chat, if you have any other ones, let me know. The last one I had on my list was Marriott. MAR ran from 84.50, gapped up and ran up in the last few minutes all the way up to 86.05. So your hotel running up over $1.50 in the last few minutes. Then it settled back, and after hours is trading down. And this morning is trading down about 30-40 cents here. So giving back some of those gains from the run. But a lot of times what you see is when these things have these ridiculous runs, a lot of times you do see them pull back to the levels where they were, sometimes as early as the next trading day. So look at those stocks, and those runs. I'd have those as bogeys if they get up to those points, probably run to sellers again. But the Nvidia one, just going back, that one felt a little bit like maybe a capitulation close there, and maybe that's a sign where Nvidia run might be slowing down or potentially over.
What's the in all those cases, is that just a product of the closing imbalances plus
Yeah.
quad witch? Okay.
Yeah, it's a product of mainly the closing imbalance. Quad witch is what gives you some crazy closing imbalances, and then sometimes it's just not the offsetting order, so they got to move. They got to find liquidity. If somebody wants to buy 100,000 shares of something, and they're not willing to sell, there's no orders in there for 10 or 20 cents, they'll go all the way up to find those 100,000 shares. So the price has to go up because there's just that much demand on the close. A lot of times you'll see another institution say, okay, 100,000 to buy, I want to sell 100,000, here you go. In this case, there just wasn't the order flow there, and that GNMX case was ridiculous, where stock ran up to 17.75, and obviously to cancel the trade, we call it bust the trade. We used to call them on the floor, and obviously that trade doesn't stand anymore. So that's why you don't see it on your closing print. Bob Wire was saying he showed a print of $69 on Lululemon.
Oh,
I did not see that
Oh.
on Lulu. Yeah, I did not see that one, so it's not on my chart here either, so I'm not sure if that one was canceled. I didn't see anything about Lululemon there. Not sure if it was just an odd lot, Bob, or not, but it did run up about 40 cents on the closing print. So, if you're trading stocks or day trading, you want to be aware of what they did on Friday. I would bring up an intraday chart if you've got something overnight. Make sure it didn't have a 50 cent or a dollar move, because then it could have some funny trading action on the Monday following those big moves.
Very, very good point. All right, I think we had, you said there was one earnings this morning, right? We had Lenar. They were the only one that really notable that I think this morning. They reported Q4 EPS of $1.39 and a revenue of $3.4 billion. Let's take a look at the chart over here, LEN.
Yeah, stock is trading up $1.50 on this, or $1.25 now, 2.88% here. LEN put a little double bottom from the last couple of days, just around the 43.12, 43.08 area. Now it's getting a lift here. Some overhead supply up here, though. I think Joel would point that out as well. You have 46, the high, 45.69, just looking at the last highs from the last 5-6 days. 45.49. Looks like lots of resistance in the mid 45. So if it runs up another 50 cents to a dollar from here, I do think it runs in trouble. And I can remember, I'm just going, maybe it's just I don't know if I'm correct with this memory, but I think last time Lenar had a pretty good report too, and I thought it gapped up and then gave it back. So sometimes it's good to look at what they did last time on the reports, and when that happens, sometimes it does it again. So I'm cautious on this one. It is up here in the pre-market. Sometimes you see some follow through when there's Trump market where everything seems to want to, certain stocks want to go higher. But I don't know. I think Lenar was a little bit weak last time after they reported. And I think it was trading up pre-market, if my memory serves me right. So cautious here on Lenar.
All right, 8:14 now. We're going to take a quick break and grab our first guest, Gary Kaltbaum. You may have seen him on Fox Business or Fox News. He's an investment advisor, also proprietor of GaryK.com. So we'll be right back.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors. This has been Zengo's Pre-Market Prep. I'm Spencer Israel here with Dennis Dick, and we're on the line with Gary Kaltbaum, investment advisor, author of GaryK.com, and Fox News or Fox Business Network contributor. Gary, how you doing today?
Doing great, sir, and happy holidays to you.
Happy holidays to you too. So, what is going on here in these financials, Gary? What's going on? Are they stretched? Are they going to sit around? Are they going to pull back? What's going on?
Basically everything I do is based on moves from the norm, either starting to move out or starting to break down, and then you go from, okay, what's out of bounds, and very simply, on the good news front, the fact that financials can be so strong is good news. But shorter term, I think in the last 5 days, we probably got a place where enough's enough. You have some moves in financials you don't usually see for 2 years that happened in a month. So I think you just be a little bit careful here. I think they're in bull mode, but in bull mode you will get 5 and 10% corrections off of moves, and I think we're probably in the midst of some sort of something like that over the next few weeks. And again, they remain bullish. I don't think they're sellable, but I think if you're looking to buy, you look for pullbacks back to support levels and moving averages. And always watch them closely because they are, as far as I'm concerned, the biggest force in the market. Back in 2007, when we started to see the financials woefully underperform markets, we knew was something up, and now you're getting the opposite.
Gary, do you watch the European financials too? Because, I mean, a stock like Deutsche Bank, which everybody hated back in September, they were talking about this thing, is it going to survive, when it's down $11. Now it's here at 19, it closed. It got a downgrade here today from Citi, so it's trading now 40 cents in the pre-market. But, I mean, it's been an incredible run for a stock like this where everybody hated it in September. Everybody loves it now. What are your thoughts here on the European financials going forward?
But still down 60% from 2014. Keep that in mind.
Great point.
Very simple. They were priced for death, and when death did not come and the financials lifted, they lifted them worldwide. So that's what's going on there. I would suggest to you, like on a Deutsche Bank, which moved above range at like 16.5 is now 19. That's going to settle down in here also. And just remember also, they were given a boatload of money to fix them up. So there are events that will affect things, not just trading. And they were given, somebody took a pretty decent stake to shore up their finances, and that was part of the process.
Let's jump over to the commodities, and oil had a big run. It's pulled back a little bit recently here, but overall it's been a pretty good move here, especially some of the individual oil stocks here as well. I mean, you talk a stock like Chevron, it's up from $100 to $118 in just the course of a month and a half. That's a big move for a big stock like Chevron. Exxon not quite as far, 84 to 91, but it's been a pretty big move for some of these commodity stocks here, although they pulled back recently. What are your thoughts on the commodities, some of the oil stocks going forward?
Well, oils are somewhat a mixed bag. I look at something like a COG, Cabot Oil, which is breaking down.
Yeah.
But then I look at something like a RSP Permian, RSPP, that looks like it wants to break out of range. There are a few names I'm watching that kind of sort of all look the same. If you look at Schlumberger, you look at EOG Resources, they all broke out and are now sitting for 2.5, 3 weeks. I'm waiting for that next move. If they can jump to the upside with volume, I would suggest they're buyable. But just remember, when you're dealing with oil prices and OPEC, you're dealing with a real moving target here based on news. So you just got to be careful. But I think they're in good shape. A lot of the stocks are outperforming the commodity, which is usually decent news. And I think you can be overweight some of those names. Not all of them, but a decent amount of them.
You got to be selective in the sector. What about gold here? Because gold has been under pressure for a while. I mean, everybody thought that maybe, if Trump got elected, the market's going to sell off. Gold was going to go up. The exact opposite has happened. Gold has been very weak since Trump has got in. Silver as well. We're getting a little bounce here this morning in the gold market. But what are your thoughts maybe going into 2017 for gold and silver?
Yeah, it was pretty simple. Back in mid-August, we started worrying about how it was acting. We started to worry that the stocks, for the first time in a while, were weaker than the metal, which is usually not a good sign. And then I believe, if memory serves me right, it was like, here we go, October 4th. That was the day where it just party over. That was the good breakdown on volume, and it's just been the bear market, and I think there's really nothing to do. You're going to get bounce days. They'll rally them up into moving averages every now and then, but so far there's just been absolutely nothing doing, and you can blame the strong dollar on that, or the flight away from what is perceived to be safety into riskier assets. And again, I just think it's in bearish mode right now, and do nothing. Again, if you can trade it, terrific. But I want to get the major trend right, and the major trend right now is not very good on gold and silver also at this juncture.
Gary, what do you think about this trend into riskier assets? Because this is what has been happening in the last 4 weeks. They've been selling yield, they've been selling the bonds, they've been selling some of your utilities, they've been selling gold and silver, and they've been buying the riskier assets. Does this continue in 2017 once Trump gets in, or is a lot of this move already, this Trump move priced in, and maybe some of these moves are overextended?
Well, I'm not very good at all at making predictions about 2017, but I mean, so far, yeah. Notwithstanding, I think we're going to get some pullbacks here, and at least some relaxation. Markets do not ever go straight up, and I really think what happened here was the world was ready for a Hillary Clinton victory. And a Hillary Clinton victory, not to get political, but would have been Bernie Sanders running the Senate Budget Committee, Elizabeth Warren maybe Treasury Secretary, higher taxes, more rules and regulations, and that completely was flipped on its butt overnight. And all the big money crowd institutions that were totally not in the market, and just so you know, we're still at 10 to 11% cash in pension funds as well as other funds. That's a lot of ammo out there. So I think all that happened that day is all the institutions were ready just in case Trump won, and the big bet is on for lower corporate taxes, less regs, Dodd-Frank going bye-bye, a bunch of Obamacare going bye-bye, and that's why you're seeing restaurants doing better because Obamacare hurts it. That's why you see the industrials doing better because potential for better growth out there. And, of course, financials, the double whammy of higher rates on the long end and Dodd-Frank going bye-bye doing the trick. And it's all I can tell you, it's still here, notwithstanding short-term probable pullbacks. And we'll see where it takes us. If Trump does not come through with the promises, I suspect that we're going to get a winding down of some of this, and it's just a matter, we'll see what happens. A lot has been event-driven as well as cash-driven.
Gary, what happened with the retail stocks the last couple of days? I'm looking at a Nordstrom. 5 days ago, the stock was 60. It closed almost at $50, giving back 10 points quietly in 5 days because the media really isn't talking that much about these stocks. Kohl's had a horrible day on Friday. It was down $3.50. And Macy's, same thing, down $2.50. Typically, retailers do better in December because everybody's shopping. So you talk to seasonality trade with these. Some people probably were actually long these things, and they're going the exact opposite direction. These retailers are starting to get killed. Why is that?
Yeah. Well, I got news for you. It's not just Kohl's and Nordstrom. Look at Coach, Macy's, Urban Outfitter, Dillard's, Decker's Outdoor, Dick's Sporting Goods, Gap, L Brands. It's just about everything. And the apparel stocks are just getting murdered. If you look at like a PVH Corp, they kind of crashed that sucker over the last 4 days. All I can tell you is I'm not so interested in why. I'm just interested in what. And the big money crowd is getting the heck out of the way of retail here. Maybe it's worried about the consumer into the holidays. Maybe it's worried about Amazon. All I know is this is bearish, very bearish, and they're probably going to be shortable on any rallies up at this point in time. To me, that looks like a pretty darn good top in place for a lot of the retail areas, and I'd be very, very wary of them.
What about Amazon? Are they just eating everybody's lunch, and that's the reason? Because I look at that Amazon chart here too, and it doesn't look that great here either. I mean, we started back in October, 840, 757. Everybody's loved this stock. What do you think of Amazon?
Well, the other phenomenon is the fact that Amazon, Facebook, Alibaba, now Qualcomm, now Priceline, past leaders like Sina, SINA, and YBO WB are all now trading below 50-day moving averages, which are now turning down. Volume patterns are negative. And, oh, by the way, add net T's in there also. And I would just avoid them. I think they're very bearish, and you do not get bullish on them until at least they get back above the 50-day moving average, and that hasn't happened. I think that could be a combo of the interest rates going higher that affect the higher multiple names. But all I can tell you is they are bearish. They're basically almost shortable. If you'd ask me, I think they actually are shortable with stops above. But if they break above the 50, that gets rid of them. As far as Amazon, look, they are cleaning the retailers' clocks, but again, high multiples are stopping these things right now. And if you look at Amazon, it's in this whole trading range now between 710 and 790, off of the old highs. So I just be real careful here, and you got to ask yourself the question: it's doing this while the market's rallied strong. If the market comes in, are they going to sink them or going to rotate them in them? Normally, I would tell you that they're not. They're going to sink them even further. So be careful.
What does this mean for the overall market? I mean, if financials are starting to look a little bit toppy and commodities, are pausing here, but you got some other sectors breaking down, are we going to get maybe a little bit of an S&P pullback before the end of the year? Because everybody's expecting this market to rally right into the end of the year. Do you think this could take the people by surprise?
I'm not saying that you're not going to rally into the end of the year. I'm just saying I think you may have had the frickin' rally over the last bunch of weeks. I mean, that was a pretty darn good move, especially in the small caps, which are laden with all these small banks with four letters in them, and that's what really did the trick. There would be nothing wrong right now if the market just settles down a little bit, drifts a little higher, drifts a little lower. I mean, look, we can rally. It is the holidays, and there is that thing called painting the tape, even though it's illegal and it does not happen. So I wouldn't be opposed to it. I think it could. I just think last Friday, it just felt like the momentum high started to come in. And if you know, we had like 900 new highs in the market. We've hardly pulled back, and I think Friday we're like 200 and something. So that just tells you that it's getting a little tired. And again, there is nothing wrong with the market being tired after the move it's had. It's normal. You have bulls up. I looked at. There's some indicators I follow, secondary indicators. Bulls are up to 60%. You got to start wiping the smiles off of their face. People that I've never talked about markets are coming over to me and saying, so should I buy? I haven't been in 5 years. So those little things kind of give you a little pause that may be too far, too fast. And I just take a little kick back and see where it takes us.
Gary, he is Gary Kartbaum, an investment advisor and author of GaryK.com. He's also a contributor to Fox Business. Gary, thank you so much for joining us this morning. We will definitely have you on again next year. In the meantime, have a good New Year. Have a good holiday and a good New Year.
And you too, my friends. Thank you for having me.
All right, thanks for coming on. Love having Gary on, as always. Great commentary.
Yeah, and you know what? I didn't notice the retailers until he mentioned it, and I was like, whoa, these things really have been killed, because he had mentioned it just right before we came on the air. And I was like, wow, those are big charts here. So you think about something like a Ross Stores, which Phil Chen just mentioned, that went the opposite direction on Friday. But that was a one, that was, a lot to do with order flow. But here's a stock that's obviously held on in some of the retailers. And if you think they're all going to start rolling over, maybe you look at one of these. I mean, the TJX chart has held on quite well here too, but it kind of looks toppy as well around 78. And if it starts to take out, Friday's low, which was at 76.62, you start to think, man, there's some air below there, because it had a big run in mid-November. So, it's just some interesting setups here, and not all of them are to the long side. So there is some stocks and sectors that are starting to look quite bearish.
Yeah, 8:29 now. We got 8:30. 5 more minutes. We're going to bring on Tim Melvin of the Deep Value Letter. You want to take a quick and balanced look if they're out?
Yeah, let's look. They just popped out, so hot off the press. Alibaba, 182,000 to buy. That is going the opposite direction, because it is actually trading in the red here right now. So keep an eye on that one. They're all pretty small here, considering how big they were on Friday at the close. They're very small. But Twitter, 20,000 to sell. Coca-Cola, 39,000 to sell. They're so small, Spencer. The only one really jumping out at me is Alibaba with 180,000 to buy. So imbalances so far are pretty minute. let's just jump over to a few other stocks because there was some other movies that we wanted to talk about and ratings changes here. There was some interesting ones here this morning. You mentioned 6 or 7 off the hop. Let's jump into a couple of those.
Sure. Well, we had Citi upgrading Costco. Let me pull up the chart real fast and pull up the actual ratings change for you because I had them all written down over here. Citi at Costco's buy, I believe. Oops, didn't type it in
Yeah,
correctly.
bye.
Yep, Citi upgrading Costco to a buy. Price target up. Nope, just neutral to a buy is all I got for you. So look at that Costco chart.
Yeah, and you have, an interesting move here because you had the big run up here. Again, it's contrarian investing I still think works. Everybody hated the stock back in October, November, got all the way down to $142. And now they all start loving it because it's starting to move back up. There's so many momentum traders out there that they can't think outside the box. I mean, in short term, momentum seems to be the trade. But I still say long term, contrarian investing I still think works. Contrarian trading has been really tough. Contrarian day trading has been really tough. But contrarian investing has always worked for me, and I'm sticking to it. Here, you look, stock's $142, now it's $162. You think, wow, a little late to the party maybe here, Citigroup, because they're already run up 20 points in the last 6 weeks. But, you look at it from a technical perspective here and look a little bit closer. Had the run up from 150 to 160. Then you got 4 or 5 days of pause. Now you get an upgrade. Maybe it resolves itself to the upside. And sometimes the technician will say, well, 10-point move, the pause digests the move. That means another 10-point move is coming. If you think that, then you start thinking back near the all-time highs with Costco, which is up near $170. So possible we start getting over that 162, 163. There's a lot of air above here because it ran down quickly back in August from that area. Possible.
Yeah, that all-time high was back in August 11th, I want to say. Speaking of Deutsche Bank, where they're talking about with Gary Kay, Citigroup downgrading Deutsche Bank today from to a sell, from neutral to a sell.
They're going to a sell on it. That's interesting. And stock is trading down 2% here in the pre-market. Closed at 1901, down here at 1860. So obviously, Deutsche Bank saying take some profits from this September move, which went from 11 to 19. I don't have a problem with that. I like it when the analysts come out, and they actually, go against the trend a little bit because 9 out of 10 of them are just going with the trend. Like the Citigroup raise of Costco was kind of with the trend. I mean, the stock had been coming back here, and we know a lot of these analysts just chase price. So I like this. I like that they have some guts to make a bold call like this and say, we think, it's time to, book some profits. That being said, the financials have been very strong. I expect, there'll be buyers here below probably when you get near 18. We had a couple of lows there just from last week there at 18.15, 2 lows around the button. So that's my first bogey. I would say 18.15 is probably a first initial bounce area for the stock just because it bounced there a couple times before. After that, if it takes out 18.15, then you get some air down all the way to 16. But I'd say it's got to get through 18 first, and there's probably a lineup of buyers there at 18 because there are some people still caught short this stock.
Let's do one more Citi downgrade today. Downgraded Finish Line to neutral. FINL.
Again, retailer fits Gary's theme here. It's been selling off for the last 6 days. That's 6 or 5 red days here in a row. Down 22.43. Got a little bit of support around $22, but obviously getting the downgrade here today, so maybe that takes it out. Below that, it's all air to 21. So 22 is the bogey it needs to hold. I'll even get a closer number because we actually had a 21.92 low back on the 16th of November. So I would say it has to hold it. I like it when they trade through the whole numbers a little bit because sometimes people put stops at a whole number. So 22, sometimes you'll see a stock take out a whole number by 5, 6, 7 cents and then turn around and reclaim it and rally above it. So I'm going to say 21.92. That's my bogey. Takes that out. Could see 21.
All right, 8:34 now. We got to take a break and get our next guest for you. Tim Melvin, 27-year veteran of the financial services industry. He is our small bank expert, of course, the author of the Tim Melvin Deep Value Letter on MarketFi. So we'll be right back with Tim.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors. This is PreMarket Prep. I'm Spencer Israel here with Dennis, Dick, and now Tim Melvin, the market find maven, the author of the Tim Melvin Deep Value Letter. Tim, how are you doing on what I'm sure is a warmer Monday for you than it is for us?
Well, it's a little cool here. It's only going to hit 85.
Gosh, oh no. What are you going to do?
It's to the point now. My daughter's living in Chicago. She won't even answer the phone when I call. So it's
You gotta rub it in on it. We're like 17 degrees here.
No, 17. My car had like 9 today. Give me a break. All right.
Yeah. This is the time.
I'm warm Canada, Spencer.
Yeah, this is the time of year when I love talking to my friends up north.
Tim, let's jump into these financials. They've been on an incredible tear. I mean, the banks have been the hottest sector since Trump has caught in. And I got to clear my throat just because I'm so excited about this. But how are you finding any stocks of value left here? Because they've all run up so much, these banks. What do you got for us?
Well, I'll tell you, my buy list in the Banking on Profit service, has been chopped in half. We were running about 35, 36 stocks. We're down to just 18. And
that's because they've run too far?
Oh, yeah. I mean, we have a cutoff. We don't like to pay over about 92% of tangible book value when I'm buying. I'm a real cheapskate. And, everything's just had a tremendous run. The move in some of these stocks has been absolutely breathtaking since Mr. Trump got elected. Going to be really interesting to see how they all do after the first of the year. But it's, for new money, it's a little tougher to find ideas right now. Obviously, with the ones we were buying last year and earlier this year, we're real pleased.
So, Tim, do you have any stocks left for us that you're looking at possibly adding new money to, or looking, you're not selling?
Yeah. Okay. Look, I'm going to give you guys a couple. They're real small. Okay.
We like those.
Yeah. The chart's not like a straight line or anything. It's just kind of dots all over the place because they don't.
Oh, you're talking like trade by appointment only.
Not quite by appointment, but we're talking a few thousand shares a day. You can get a trade done, but if
you got to work it.
If you put a market order in, you're not going to like what happens. Okay?
Don't market order these guys, folks. Listeners, do not use market orders on these thin stocks that Tim is going to give you here right now.
Okay. We've got, and the stock is up, but it's not up as much as some of the others just because it operates out of the booming metropolis of Grand Island, Nebraska. That's Equitable Financial Corp, symbols EQFN. Trades about 5,000 shares a day. It's had some bigger volume days, but not in a while. It's sitting here. It's trading at 86% of tangible book value. Great loan portfolio. Fantastic balance sheet. Nice, safe little bank. A lot of smart money in it. Some activist money in it. Just a strong bank to hold for the long term. And, with these small banks, with all of them, one or two things happens. They either do a nice job of growing the bank, instituting a dividend, buying back stock, and getting the share price higher, or as so many of them have found, it's very tough to operate with higher regulatory costs, higher technology costs. So you've either got to grow or you got to consider selling the bank. Either one of those is a really great outcome for us. So if we can buy these things, like Equitable here at 86% of book value, hold on and someday sell it at between 1.5 and 2, which is usually our target, it's going to be a pleasant result. In the meantime, there's not a lot of risk to the bank. It's just a nice little bank with a great loan portfolio.
What's the market cap on something like this?
The market cap on this one, that's huge here. It's $32 million.
Oh, you're talking real small. $32 million bank.
Yeah, as I said when we first talked this morning, there's not a lot left in the larger banks. They've all run up. They're at 1.2, 1.3, 1.4 times book value, and we're not buyers at that level.
Are you sellers at those levels, or are you still holding on to some of these?
We're holding most of them. We sold a couple where they got up to 1.6, 1.7.
Which ones were you selling?
Well, your favorite, we sold Bank of California.
You did sell Bank of California.
We sold that over 20. I mean,
yeah,
just running so hard. We saw some institutional selling, so we went ahead and got out of it.
What about when Bank of California? So, and I actually thanks Tim because I participated in this one too. I bought it at 12 on your, when you were saying that you were buying it, and I sold it in the 20s as well. I think $20 or $21. So I participated right along with you. I'm out of it now, and I looked at that big sell-off back in October, thinking, man, maybe I should jump back in this. But then there was some unknowns. It got down to 1093, and they were saying that one of the board directors had some ties to somebody that, what was it, Spencer? They had some ties to
a notorious fraudster, I believe was the term.
Yeah, and that's why it sold out $3-4. were you looking at something like the Bank of California was selling off, or when you see something like that, are you just hands off?
I'm hands off, and the other problem is they desperately need to raise capital.
Okay.
Their equity to assets ratio is down. Is low. So they've got some PL Capital, the activist firm, is leaning on them really hard to make some necessary changes and raise capital and do some other things. But the board's been kind of fighting the idea. So for now, I'm willing to just sit on the sidelines because I think there's a little more risk in the balance sheet than I really want to see.
Tim, let's jump back. You were going to give us 2 picks there, so you gave us the little $23 million bank EQFN. What else do you got?
Okay, well, here's another little one. Let me just get this up here on the screen. That's Hamilton Bancorp, HBAK, out of my old stomping grounds up in Baltimore. And again,
HBAK?
I can't even get the symbol on this one. What is it?
HBK.
Oh,
HBK. Yeah.
Yeah. And again, trades around 5,000 shares a day, trading a little under 75% of tangible book value. Just a nice little bank. The Baltimore market has been consolidating. I expect to see more in the future, and I think this is a target to be consolidated. And again, you've got activists in the stock. You've got a ton of smart money. Joe Stillwell owns it. The guys over at EJF Capital, who are some of the best bank and REIT investors on the planet, own it. Maltese has some, Caesar Capital. So it's for a little bank, it's a really strong shareholder list.
Tim, why do you think a stock like this? I'm because you follow the sector so closely, you might have a better answer than I could speculate. So, this is one that has not participated in the Trump rally, really. I mean, it's only up, you're talking 40 cents on a $14 stock, a few percent really since Trump got in. Why do you think a small bank like this doesn't participate? Like a Bank of America's up 30% in the same time. Is that concerning to you, or it's just that nobody knows about it?
It's just that nobody knows about it, which is my preference. I mean, as you know, Dennis, I avoid liquidity at all costs.
You don't like that.
So, yeah, it's just a small bank. There's not a lot of buyers. Absolutely nobody is covering the thing. And I really think in the case of Hamilton, just kind of one of those technical things, I think they get ignored even more because there's only 3 letters in the symbol.
Oh, really?
Yeah, everybody's looking at the NASDAQ banks. You go look at the over-the-counter traded smaller banks, they're all up. No, this one just kind of gets ignored.
Slipped through the cracks. So,
yeah.
Okay. Violin Maker is asking you for a target on this one. He's interested, too, from our chat there. Do you have a price target for this?
I don't use price targets. Book value's 19, so 1.5 times book would be, 30. What's
the book value on it right now?
$19.46.
Okay.
So
well below that.
Yeah, no, we're at 73% of book value this morning. So, and again, guys, do not use a limit order a market order on these things. You'll get run.
Yeah.
Yeah, you have to be careful buying these. I'm going to say 75% of the time we sell because of a takeover offer. The rest
your holding period sometimes is years on some of these, right, Tim?
My holding period on these is almost always years, unless we get an offer in the short term.
Right. So these aren't short-term trades here. You're looking, and you'll hold these things if they start to pull back. You hold on while too, because your holding period is so long.
Yeah, and as long as management's doing a good job, book value is growing year over year, and it doesn't run up to that point where I can't stand owning it anymore, which is 1.6, 1.7, getting up near 2 times book value. Then I'm a seller. But usually I'm just willing to own them for a long time and let time and value and compounding returns do the work for me.
Tim, there's a couple symbols coming from Ed Parker in the chat. I'm not sure if you cover these ones, but he's got some smaller banks as well. Citizens Community Bancorp, which is CZBRA WI. Do you follow that one?
I own. Yeah, follow it, own it.
You own it. You're in this one.
Yep, we have it in the in my wife's IRA. That's commonly referred to as the "Don't lose my money because I can kill you in your sleep" account. And the stock is actually at 94% of book value, just off the buy list. If I owned it, I would certainly be holding it. If I wanted to buy it, I'd put a limit in a little bit under the market here.
And then there's another one coming, CATC, which is Cambridge Bancorp. Do you follow this one?
No, I do not. Let me just get some.
$62 stock. This one I'm having trouble even bringing data up. So Ed, you found a thin one here too.
Yeah.
Maybe this one's too thin for Tim.
No, just hasn't hit the radar screen. There's nothing too thin for me. I bought a $6 million bank the other day.
$6 million. What one was that?
Not saying.
Not saying. Oh, you can't say.
No,
Right.
no.
Too small.
The SEC would be on the phone with us before we hung up if we put that
Oh,
one out
really?
there.
A real small one.
Yeah.
So CATC. So yeah.
All
So
right,
this one is.
we're looking here. Yeah, doesn't trade much. 1.84 times book value. So we know I'm not interested in being a buyer here, certainly.
Okay.
And
Symbols are popping out of the chat here all over. So we got Western New England Bancorp, WNEB. Rob Hood wants to know if you follow this one.
WMEB. No, I do not follow it.
They are throwing some wild ones, small ones at you here, Tim. They were ready for you here this morning.
They were.
This one's a $275 million bank here, Western New England Bancorp, WNEB, and it's had a little bit of a run up here too. Obviously, all these stocks have, and if there's another one here too. Well, this one's a little bit bigger one, so I'm not sure this is in your wheelhouse or not. Bank of the Ozarks, OZRK.
A Bank of the Ozarks this is like home bank shares in Arkansas. It's what I call a buy and a crash bank, or if they take over one of your banks, you keep the stock.
Okay.
Okay. Really well-run banks, very low efficiency ratios, great earnings growth, all driven by acquisition. These are the smart buyers, okay? You're never going to get a price to book where you want to make an open market purchase, except in a full-on market crash. But if shares come your way because they bought one of your banks, it's generally a good idea to hold it because they can compound over time through a series of acquisitions. But the stock's almost 3 times book value. I'm certainly not going to be a buyer here.
This is too high for you, OZRK.
Yeah.
What about the big banks? So let's jump into the ones that everybody owns here, and I'm sure you got some opinion on these too. I mean, the Bank of America has run from $16 up to over $22 here in the course of a short month, and obviously the book value has been popping up here too. Goldman Sachs had an incredible run from 180 to 240. J.P. Morgan's run up from 70 to 85. Citigroup from 50 to 59. Do you think these banks have run too far now, or what do you think about the bigger ones?
The big banks have probably run too far because they're really, to the Bank of America, Citi, there is no benefit of a Trump administration to these banks, okay? The smaller banks we're looking at and we're saying, hey, these guys are going to get serious regulatory reform of some sort. That's going to drop to the bottom line. The guy, analyst at Stifel the other day, said that in his coverage universe, profits could be up by as much as 30 to 40% for the smaller banks. Then if you go up a little bit bigger and if they raise the systemically important financial institution limits from 50 to 250 million, which even Barney Frank has said is a pretty good idea, you got a whole bunch of banks that now come back into the takeover business. But Bank of America, Citigroup, they will always be regulated as too big to fail banks. They will get zero regulatory relief under the Donald Trump administration. Even if he recommends it, it'll never go through Congress because they won't be able to get enough votes to fully overturn Dodd-Frank. There are some moderate Republicans that are not going to give the kids the keys to the car again.
So would you be taking profits on these runs then? Because they've run up 25-30% on the speculation that they might be able to repeal Dodd-Frank?
Yeah, I think so. I mean, I think we're going to see selling come into a lot of these stocks after the first of the year. Right now, we've taken a bunch of sellers out of the market because anybody that's investing outside a qualified plan is looking at their profits and saying, if I hang on till January 2nd, I'm going to have probably better tax treatment under the Trump administration than I'm going to get under the current tax laws, because lowering capital gains tax is, a big part of Trump's tax plan.
Tim, just before we let you go, we got about a minute here left. Just want to get your thoughts going into 2017. Do you see this as a year where, a lot of, we're going to have a continued strong bull market here, or, are you just looking, and what do you have a couple stock picks for us for 2017?
Stock picks for 2017. Okay. I don't make market predictions. I have no idea what's going to happen next year. Anybody that makes a firm prediction, I think, is really just kidding themselves. Obviously, we're going to have a much more pro-business atmosphere then we got to turn that around and say the market's been up for 7 years in a row. We're trading at 25 times earnings on the S&P on a trailing basis, and how much higher can we really go? So it's going to be an interesting year. I think it's just it's going to be fun to watch. And if I was going to switch careers, I'd go for political cartoonists next year because those guys are going to make a ton of money.
I think
I'll give you one stock pick. I don't usually do this.
Sure.
But
the good stuff here.
Okay, the one stock, if somebody put, Doug Cass and his proverbial gun to the head, it would be Brookfield Property Partners, BPY.
BPY.
Yeah. They own real estate all over the globe. It's a very complex ownership structure because they do have a lot of partnerships and joint ventures, including some with their, basic parent company, Brookfield Asset Management. But, they've got multifamily, they've got world-class office properties all over the world. You basically own the skyline of some very big cities in the United States, big projects in London and Australia. Just every property class. They have industrial properties. As I said, they have multifamily. They've got a bunch of auto dealerships that they got out on a triple net basis. They've got, hotels and some pretty well-known ones. Management's committed to growing the dividend. They're doing a stock buyback. The dividend's at 5.13%. It's trading at 95% of book, but management's estimate of net asset value that they put out every quarter is over $30 a share. So you've just got some fantastic property all over the world, trading at a discount to what it's actually worth with a great dividend that management's committed to trying to grow. And all you need is reasonable economic activity and appreciation. And you've got a security here that I think can compound in the upper teens for a very, very long time.
All right, Tim Melvin, author of The Deep Value Letter. I think that's the first time that sentence has ever been said. The political cartoonist will make a lot of money. So first time that's ever been said. Tim, thanks so much for joining us. We will definitely have you on again in the new year.
All right, guys, looking forward to try to stay warm up there, okay?
Oh,
thanks, Tim.
Bye-bye.
We'll do our best. All right, that was Tim Melvin, author of The Deep Value Letter on MarketFi. A couple other stocks that I wanted to hit on. Well, let's go back to ratings real quick because there was a couple other ones that we had. We discussed Costco, Finish Line, and Deutsche Bank. Citigroup also downgraded lows this morning.
Retailer again here, and you're starting to see, like we said, a little bit of weakness starting to come into the retailers. Even Home Depot and Lowe's, because these two stocks have been two of your best. I mean, Home Depot's been unbelievable to hold up when some of the other retailers, even at the beginning of the year, were getting hit. Home Depot was not. I mean, you look at these things and you think, wow, they've just had such, incredible, held on so well here. You just wonder, if there isn't some, people who are sitting on profits thinking, I'm watching other retail stocks break down. Maybe I'm going to start selling these stocks here too. Now you get a downgrade here today. Maybe that's a catalyst to start a sell-off in Lowe's and potentially Home Depot. So I'd be very cautious if I own these two stocks just because they've held on a lot better than some of the other retail stocks, and the retail stocks are breaking down.
Yeah, that great point there. We had Jefferies downgrading both Merck and BMY.
Actually, it's an upgrade to BMY and a downgrade to Merck, which is interesting.
I misread that. Okay.
So they must be looking here, and obviously Bristol Myers and Merck have kind of went in the opposite direction a little bit since, Bristol Myers' little drug debacle. That was Merck's, that was good for Merck because they had a competing drug. But Bristol Myers here, if we're just talking, has had a pretty nice move. I mean, BMY has moved from $55 in the last week and a half up to almost $60 on Thursday. Pulled back a little bit, getting a little lift here this morning. The bogey for me is $60 on Bristol Myers. I think there's a lot of overhead supply up there. If I just look at the book, I don't see anything jumping out at me in the book, but I wouldn't be surprised if there is some institutional flow blocking you. So that's my bogey here for BMY. I think you run into some early resistance up at that price. For Merck is one of the biggest positions in my own investment portfolio. Full disclosure, I've owned that for about 7 years. Done very well. I'm averaging on my Merck around $30. It's now $61. I look at it and I think, well, you look back and you go years and years back. Merck used to be a $95 stock back in the financial crisis. The dividend's still 3%. I still think there's value here in Merck. The only thing is short term here. We've done pretty well in Merck. So I think there's lots of buyers down in the 59.60 area. And we've been running into resistance up here at 63, 64. So I think it continues to trade in that range until it breaks out one way or another.
Question in the chat here from Valentino. What do you think about a FedEx tomorrow? We should preview the earnings week, but let's look at FDX.
Which one? FedEx?
Yep.
Yeah, so FedEx, again, this is the same story. Stock has really run. And I owned FedEx in my investment portfolio for a long time. It was averaged in around $90. And I finally sold it around 160 or 170. I think it was like in the 160s somewhere. Obviously, I sold a little bit too early because we've been on a pretty incredible run. That was in the summer I sold it. And we got up to over $200. So I sold too early here. But you look, it's been a pretty big move. I mean, at the beginning of the year, FedEx was down $120. Now you're at 200. Just quietly, this has been one of the best stocks of 2016. Going forward, there's still a lot of people who are buying stuff online, still good for shipping companies long term. I just think valuation is stretched here now. So longer term here, I think FedEx, is due for a pullback because there's a lot of people sitting on a lot of gains. Again, sometimes these stocks are strong. The strong get stronger, it seems like, into the end of the year and the week get weaker. So, but I'd look for January maybe to start to see some selling pressure in a stock like FedEx.
As far as other stocks reporting this week, you may want to pay attention to. We have Nike, we have Finish Line, Conagra, but not lighter week on the earnings front. But those are the few that jumped out to me that are reporting this week. Aside,
Nike has just found support of $50, but it's been hanging out here for a long time now. So that is somewhat concerning to me here. So, you like to see, stock have support and you like to see it bounce off it, but it's hit 50 so many times in the past. If Nike disappoints, I think it's not only going to cut through 50, I think it's going to cut through the low that it had back in November at $49. This is if they disappoint. I mean, if they beat, the stock's obviously going to pop again. But if they disappoint, I think Nike has a serious shot at testing its August 15 low, which was 47 and a quarter, so which would be almost 4 points below here. So, I do see, a little bit of weakness, overall, and Nike hasn't run up. It is a retailer, when the retailers have been weaker here. So I'm concerned if Nike disappoints that we might eventually breach that $50 support, and then the stock could be in some trouble.
all right. Any stocks that we missed today? I think we actually hit on all the ones that we wanted to hit on.
Yeah, we've got pretty much everything on the list. We didn't get to cover Apple here. Gene Munster
Oh
gave his
yeah,
last.
Gene's last
Yeah,
note.
and I don't know if you have the report in front of you,
I
but
do.
he gave his last thoughts because obviously Gene is not going to be covering Apple anymore. As Benzinga actually broke that Gene is now moving into some VC stuff, so he is out of Piper.
I can give you real quick his thoughts in his last note. So short term, he does see that the iPhone 7 will have better than expected unit growth for the March and the June quarters. In the long term, he expects Apple to transition into more of a services company, so that entails accepting a lower profit margin on hardware by selling low-end devices and selling a bundled hardware-software package directly to consumers.
I mean, somewhat concerning to me because it's not as bullish of a note as he's been in the past. I mean, Gene has been all over Apple, one of the best. He's been bullish it the whole time here for the last decade. And, obviously this has been one of the best stocks in the last 10 years. So, props to Gene. Nobody's had this more right than he has. And he's not as bullish as he was. He's still not bearish the stock, but he's not as bullish in that note. And that's a little bit concerning to me as a shareholder. Apple is one of the bigger investment positions. I still think there's long-term value here. I still think Apple has a lot more tricks up their sleeve. So I'm sticking with it long term. Short term, Apple's had a pretty good run. We've come back a long ways from the low that we had just after Trump got elected. We went all the way down to 104, and we've come a long ways back from that. And there's lots of overhead supply here, 116, 117. So I think you're a little late to the party if you're jumping in Apple now. And I wouldn't, if you were short term, if I was in this for a swing trade, I think I'd be selling the stock. But I'm in it for the long haul. I've been in it for a while, and I'm going to stick with it just because my time horizon in this is years, not weeks or days.
All right, yeah, we're at 1:15 this morning, so right back at that October level. All right, that's the show. That's it for us today. We're gonna let you go. Tomorrow we've got Nick Shaheen on, as we do every Tuesday. If you missed our chats today with Tim or Gary, catch the whole show again. It's available on YouTube in about 10 minutes, and then of course on iTunes, SoundCloud, and Stitcher in about an hour from now. Please remember that all the information, material, and content from our show is for informational purposes only, not meant to be investing advice. And if you want a free 2-week trial of Benzinga Pro, just call us up at 313-723-2000, or you can go to pro.benzinga.com and get that free 2-week trial of Benzinga Pro. It's Benzinga's real-time news platform. Hope you all have a good rest of your day. Good luck trading, and we'll be back with you folks tomorrow.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.